So the market is currently hitting all-time highs. The All Ords is hovering around the 8,000 points. So a lot of people are suggesting you take your money out of the market. Is that the right thing to do though? I've had coffee, let's talk about it. So you've heard this advice before, buy at the bottom and sell at the top. I don't care for this advice at all. Trying to time the market is just a fool's game. So I'm going to be looking at some research to show you why I think that, and also we'll be looking at both the US and the Australian market. Now, first of all, the stock market reaching all-time highs isn't that rare. It actually happens about a third of the time. It also doesn't mean that every single company is at its all-time high, just that the average index is. But I get it, it makes investors kind of nervous. There's that thought that we're at a ceiling and it's about to plunge back down. But actually, how true is that? Now, alas, I am no good at predicting the future with any certainty. But I do like to look back at history and see what's happened in the past. What has happened to the stock market when it's reached all-time highs before? Has it crashed right after? Has it gone on to increase in price even further? What actually happens when the stock market reaches those highs? Now, even though past history is no guarantee of future movements, I think it's the best thing we have to go on. I feel like it's much more reliable than just fear-based advice, even though those scare tactics are far more compelling than actual facts. So let's go back in history. Since about 1926, the stock market has been at all-time highs about 30% of the time. And the rest, it's either hovering slightly lower or significantly lower. So the market is actually at all-time highs much more often than people give credit to. And yes, at some point the market will turn down again or go on sale. But here's the important thing. New highs does not mean that the market has peaked. And just like a sell-off doesn't mean it's not going to fall further either. So JP Morgan research shows that even if you invested in the S&P 500 on the days where the market was at its highest, rather than any random day, you would actually do better. And even though this data is a little bit old, it's 2019, looking at the 5-year returns of buying at the dip rather than the new highs, you actually would have lower returns if you kept buying at the dip rather than the new highs. This other data from RBC Global Asset Management looked at portfolios, and it showed that consistent investing, even at market highs, the investors that only bought at all-time highs compared to investors that bought at other dates, there was no real significant difference. The 1, 2, and 5-year differences of those portfolios didn't actually vary all that much. So here's a quote I love about that. Historically, all-time highs are followed by more all-time highs. So let's look at the All Ords. Probably the best example I can give is over 20 years old, but it was most consistent when the market was continuously reaching all-time highs. From about mid-2004, it just started reaching highs, and it continued to keep reaching highs and highs and highs for the next 3 years. What if you had taken your money out here, or here, or here, or here, or here? You would have missed out on so many gains. And I know what you're saying, what happens if you bought right at the top, right at the peak? Then yes, you would have been waiting a long time for the market to get back to where it was, unless you started investing consistently after that and bought here, and here, and here, and here on the way down. That way it averages out the price that you originally paid, and you just start making money far more quickly. Using that dollar cost averaging means you don't really have to think about it so much. You're not trying to time the market. You're not trying to get the best results, because so many investors have failed trying to do that. I prefer the simpler, far less stressful approach to investing. So what should you do right now? Now, babe, I can't tell you specifically what to do. It's your money. You need to make that decision. But having invested myself over many years during up and down markets, I have never regretted keeping my money in the stock market. Investing consistently, whether the market is up or down, and letting the compounding effect of the market do its own magic, I went and lived my life. Nobody really can predict when those highs are going to end. In 2004, like I just showed you, the All Ords kept reaching new heights for over 3 years, and you would have missed so many gains if you had taken your money out too early. And yes, it eventually did fall, but it took a long time for that to happen. It's just near impossible to tell where the actual top is. You, of course, can take an educated guess based on economic market factors, but really, there's no guarantees. Those investors that kept their money in the stock market over the long term during the up and down periods, they made money, and they didn't have to do anything except be patient. Happy investing.